This week's Fed Speak and economic reports are going to be catalysts for Bitcoin volatility. Hey guys, it's Keith Allen, and we are back after an interesting weekend. Things kind of actually flat for most of the weekend, and now seeing a bit of a pump here out of Bitcoin. Let's go ahead and start with a quick look at the charts, and then we can look at some of that economic data that I alluded to that I think is going to really be a key factor here with what's happening over the weekend. So first, let's switch over to the candle chart here, and we'll take a look. As you can see, Bitcoin, last week we wrapped up the week saying that the Bitcoin bulls were pinned in a range. And, well, that's really kind of still the same situation here. Of course, we've had a weekly candle close, and the range is moving a little bit. So we can analyze that and see where we think things might go at this point. So as you can see, Bitcoin kind of hung in here on let's go to the weekly here for a second. And I want to, obviously you can see we have a bit of a pump coming here through the day. We did have a new trend precognition signal on the daily candle. This is not a super strong signal, by the way. It came in late and not super strong at the moment. So this could invalidate very easily with a move back below, say, 60,800. In terms of where resistance is right now, this 21 moving average here on the daily chart, that's been strong, and you can see fighting for that line right now, above and hovering above and below it today here. And I think that we're going to see things kind of hover in a range here. Maybe, in fact, see some shorts get squeezed. And, if price can move above 63K, there's some liquidation, some over leveraged shorts up there that are in jeopardy of getting punished here. So that's certainly something to be aware of. And in terms of what's happening on the downside here, where we could go if things break loose, let's look at the weekly chart here. And something interesting has transpired here in the last 24 hours with the weekly candle close. Hey, what's up, TradingView? Can I get a refresh here? What's going on? Let's see what's up here. Okay. Let's get to a weekly chart. There it is. All right. So here on the weekly, we've had this critical support zone, right? We're up in this range up here. This is our breakout or fake out zone. We did move below that last week towards the end of the week and through the weekend, kind of climbed our way out here by the weekly close open. And now we're back up here hovering above the trend line on this falling wedge. But this is what I'm looking at here. I've told you before that this 21-week moving average was really my critical zone. And after the weekly close, it has moved from below that lower low at 56.5 to above it. So this, conceivably could be protecting from that lower low. This could conceivably mark a bottom, but it needs to be retested, right? It hasn't been tested yet. We've been down, we thought that this 59K level was going to hold. It did not. We moved down here and created a new lower low at 56,500. That is currently our lower low. That's currently the number that we want to stay above, or we risk moving down into the 50 to 52K range and then potentially even going lower into the 44, 45K range. So I think this is very, very important and something that I'm watching very, very closely. If this holds, that would be strong. And this would be a good place for a potential next big move up. Obviously, this 58 to 60K zone is an area of historical importance. And we have got quite a bit of history here over the years. So the fact that we're above that right now is a good thing, and that makes sense. There's some technical merit to that at the moment. So I talked about the potential for the economic reports and Fed speak to really have an influence over what's happening this week. So let's take a look and see what's on the schedule here. We do have some Fed officials speaking this morning. That actually just happened. I was dropping kids off at school, so I didn't hear that. But what we do have tomorrow, really a big day. We start out in the morning with core PPI metrics coming out. And then we have Fed Chair coming shortly after that. So it will be interesting to see what his, the market always responds to Fed Chair Powell's words, even if he's not telling us anything that we haven't heard before. It's really about his tone. And if there's questions in those presentations or a Q&A with the media, then that often reveals some subtleties. You kind of have to read between the lines to really harvest the alpha out of those interviews, but it does tend to move markets. So we not only have the PPI coming, and we have Fed Chair Powell. These times are not in Eastern Daylight Time, by the way. So this is actually 8:30 Eastern Daylight Time and 10 a.m. Eastern Daylight Time for anybody following along. On Wednesday, more key inflation data with core inflation metrics coming out on Wednesday. And then we move into Thursday, always a big day. We'll have, in addition to the jobless claims, continuing jobless claims in the 4-week average, we'll have housing starts and building permits, which are also some key metrics that the Fed is watching. So, the reports are either going to, you know, I don't think they're going to be deviant from Fed Chair Powell's, comments. I think they're either going to support the idea of potentially having one or more rate cuts by the end of the year, or potentially pushing things higher for longer. The market wants to see, and I'll preface this by saying I'm no economist, right? So take what I say with a grain of salt in terms of economic data. I just know that it historically moves the market, and I also know that the market wants to see, or at least the Fed wants to see, a higher unemployment number or jobless number to really give them the idea that they might need to cut sooner than later. They want to see inflation coming down, not going up. If inflation is indeed going up on those other core metrics, then that kind of alludes to the higher for longer sentiment, and potentially even a rate hike down the road. There's been no talk of rate hikes yet. Will be interesting to see if Fed Chair Powell starts to float that idea out there. He doesn't like to surprise the market, so he would be putting that out well in advance as even a possibility before they get to doing that. Nothing's going to happen tomorrow, right? It's just going to be a matter of what they're telegraphing, as so the market can prepare and bake these things in, which is what tends to happen. In terms of liquidity in the order book, you can see right now that we actually have purple whales buying a bit here. That's what got us up above this level of resistance that we saw over the weekend. We did see some heavy resistance move into the weekend. My internet connection sucks today. Oh my God, really? Okay, I think my internet might be not cooperating. So let's see if that server refreshes here in a second, and we can go back and take a peek at fire charts. But this really is something I'm watching very closely. If we move above 63, that's obviously good. But I think that in this process, we're clearing out some liquidity, and more than likely going to see that those thin areas of liquidity that are being cleared out now likely get exploited, as whales like to do ahead of these Fed Chair Powell speeches. So be mindful of that. That's pretty much it. I've got a short one today. I've got a pretty busy day, so I'm going to be coming back later on and see if I can see if things change a little bit. But I really think that the market is in a bit of a holding pattern, waiting to see what the Fed is going to telegraph tomorrow. For those of you watching the ETF flows, we did have a net negative day on Friday, which had Grayscale selling once again and BlackRock buying once again. Today, I won't be surprised to see if we had a day of negative outflows today when it's all said and done. I think the market is really positioning for an opportunity, and I do think that we could potentially discover that this range below here, that this range from this 59 to 63K range could potentially turn into our reaccumulation range. I know that Cointelegraph actually put out an article over the weekend, and we got quoted in that. I was pretty stoked to see that. Let's see if I can find that one for you real quick. Where's the reaccumulation range going to be? And this was actually something pretty interesting. There's a pretty interesting thread here. If you haven't seen it, be sure and follow along. You can find it on the material indicators, and of course on the Cointelegraph page. But you can find this, and there's a pretty interesting thread, and including many metrics. God, that's not what I intended to do. Here we go. Now I want to show this thread. There's a lot of different metrics in here that you might be interested in. So, the question was, where's the reaccumulation range going to establish itself? And we haven't yet retested support, but that can all certainly happen here over the course of this next week as we have these inflation metrics coming out that could trigger some volatility, likely going to trigger volatility in both directions. I would be very happy seeing a retest of support down to this 21-week moving average, and I'd love to see it hold. That would be super, super strong to me if we did get a bounce from the 21-week moving average and then establish our consolidation range or reaccumulation range up above this before we see our way out of this level. And again, in terms of breakout or fake out zone, for me, until we start seeing full candle bodies above this 2021 top at 69K, which has been a difficult level to break, then we are we're still going to range, in my opinion. Let's just see if this has if we have a server issue I need to go tend to after this. Here we go. We're back. We're back, baby. So when I talk about liquidity, thin liquidity getting exploited, this is exactly what I'm talking about here, right? So you see that these areas have been cleared out, and now it takes very little to get back down here. So looks like at the moment, whales are buying. These purple whales are buying, and also looks like the yellow class is buying here in this situation. We often see that yellow class as a mixture of retail and heavily influenced by whales who have been TWAPing quite a bit lately. This contour right here doesn't look so much like TWAP. Let's see what it looks like here, right? Well, this actually, these smoother lines, these smoother with less contour does look like it is heavily influenced by a TWAP bot. So that's not surprising. What is surprising is we don't often see it correlated with what purple whales are doing. Often it's doing the opposite. So we'll continue to watch this through the day. If, like I said earlier, if 63 gets broken, then we're going to see shorts punished up to 65K. That's my expectation anyways. And again, with this downside cleared out, don't be surprised if we round trip this range between now and the end of the week, probably even by tomorrow when we have Fed Chair Powell speech. So that's what I'm looking at the moment as we head into another week here. Maybe more buying opportunities if price goes down and retests support again. The level that I want to see happen would be this 21-week moving average. I'd be very, very happy because not only would it be establishing this as strong technical support, it would also create a higher low. And we need to see higher lows, right? Sure, we have them right now, but none of this has been tested yet. So we need a retest here, in my opinion. If we don't get it and we move up this way, I would still expect a retest to happen at some point in time until we start printing those full candles above the 2021 top. That's going to do it for this bit break. We will crank out another one if we see anything noteworthy happening for you guys today. In the meantime, I hope you find these analysis helpful. And if you do, if you like what's going on, please do me a favor, smash all the buttons and share a comment with me. I appreciate all the comments and support you guys have been showing me, and I engage with each and every one of them. So keep them coming, please. I appreciate that. And with that, I hope everybody has a profitable week here. Let's start things off right. Hopefully we find some opportunities here that we can capitalize on and put ourselves in good position for this market, this ever-changing market here, right? With that, let's call it a wrap, guys. Have a great day.